Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. The euro fell the most in almost a month against the dollar due to concerns that the European debt crisis may continue to worsen. Banks in Italy plummeted as the fallout from Europe's debt crisis threatened to spread to the region's third largest economy. The shared currency steadily fell each day and declined nearly 2% on the week. The euro-dollar pair was last trading at 142.61. The pound made gains on Friday against the US dollar after a report showed that US employers added the fewest jobs in 9 months and the unemployment rate had unexpectedly increased to 9.2%, the highest level this year, adding to signs that the US economy is struggling to emerge from recession. The pound's advance on Friday made up for earlier losses in the week and the pair finished almost unchanged at 160.56. Sterling struggled against other major currencies, well softening against the euro in recent months as a result of the single currency's favourable interest rate differentials. On Thursday, the European Central Bank hiked base rates to 1.5% and markets have anticipated another rise this year, while the Bank of England has kept rates on hold at record lows and is not expected to raise rates before next summer. The yen and Swiss franc rose against most of their major counterparts as evidence that the US economic recovery is stalling, spurring demand for a more reliable refuge. This week, the dollar-yen pair declined minus 0.30% and closed at 80.64. The Canadian dollar declined 0.4% against the greenback, with most of the drop coming later in the week after the US unemployment rate reports. The loonie weakened further on July 6 after China raised its benchmark interest rates for the third time this year as inflation accelerated to the fastest pace since July 2008, further damping demand for riskier assets. In commodities this week, crude oil fell on Friday, diminishing gains for the week. August crude orders managed its second consecutive week in the green despite the US unemployment rate news, which reduced optimism for an economic rebound and increase in fuel demand. Gold had a solid week of consecutive gains, finishing the week up 3.8% and was last trading at $1,543 per ounce. Recent economic concerns have spurred an investor appetite for gold as a hedge against inflation and a refuge against economic uncertainty, both in the US economies and in Europe. New Zealand's dollar, which closely follows the price of gold, had its third weekly gain against the yen and second against the US dollar. The disappointing US job report spurred sales across the board of higher-yielding currencies like the Aussie, which relies heavily on gold as well, but also on other commodities linked to growth. Probably the biggest story of the week and the one with the most economic impact was the US unemployment rate, rising for a third straight month in June. Hiring slowed and earnings idled, pointing to an economy lacking momentum as it enters the second half of the year. US federal officials have said that the slowdown in economic growth in the first and second quarters was in part due to temporary developments. An example of this would be how manufacturers were impacted negatively by supply disruptions in the aftermath of the earthquake in Japan, while a surge in gasoline expenses restricted spending by American consumers on other items. Well, that's all we have time for this week. I hope you enjoyed the review and you'll join us next time. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.